Hi, and welcome back to the Food Fund. In this video we will be analyzing if Cal-Maine food stock is a buy. Cal-Maine, stock ticker symbol CALM, is just one of many companies we explore on this channel. The Food Fund is focused on all things related to investing in food, beverage, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in great companies. If you love food and love stocks, you will definitely love this channel. We have a lot of goodness to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Cal-Maine Foods. Cal-Maine was founded in 1957 and has its headquarters located in Mississippi. The company produces, grades, packages, markets, and distributes shell eggs under brand names such as Eggland's Best, Land O'Lakes, and Farmhouse Eggs. Cal-Maine products are distributed via many popular grocery stores, retail stores, and food services companies across the United States. Now let's look at the price action. Starting with the 1-year chart, we see that Cal-Maine had a CAGR of about -19%. Zooming out to the 5-year chart, we see that Cal-Maine had a CAGR of -1%. Cal-Maine share price has fallen dramatically this year. If we perform a backtest comparison of investing $10,000 in Cal-Maine versus the S&P 500, we find some interesting results. In that comparison with the S&P 500, $10,000 invested in Cal-Maine would have generated just $11,685 or a 2.3% CAGR versus $17,271 or a 9.8% CAGR if invested in the S&P 500. This demonstrates dramatic underperformance for Cal-Maine. A Cal-Maine investment would have been much more volatile with a 26% standard deviation versus 18% for the S&P 500. Although both the best year and worst year performance of Cal-Maine beats the S&P 500, Cal-Maine max drawdown of 29% is worse than that of the S&P 500. And surprisingly, Cal-Maine underperforms the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. Let's take a look at the fundamentals to find out more. Gross margin is 35%. Not bad for a food producer. Revenue has compounded at around 20% over the past 5 years and has reached over $2.9 billion most recently. Here we can clearly see that the revenue growth has not been steady over time, with a large rise from 2021 onwards. Looking at cash flow, we see a 53% CAGR over the last 5 years for operating cash flow, while capex has doubled. As a result, free cash flow has increased at a 80% CAGR. Here we see a rapid cash flow rise, again coinciding with the recent rise in inflation. Weighted average shares outstanding are essentially the same over the last 5 years, going from 48.6 million shares in 2019 to 48.8 million shares most recently. Cal-Maine is maintaining their share count. While this is not as attractive as buying back shares, I am happy to see that the company is not massively diluting shareholders. Now let's view return on invested capital. Return on invested capital has popped from 4.7% in 2019 to 53.3% in 2023. Again, the rapid rise in revenue and cash flow has trickled down to return on invested capital. However, these gains do not look to be sustainable. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 61 days in 2019 to 43 days most recently, Cal-Maine has gotten more efficient as of late. This is great news, and the downwards trend shows further improvement may come. Now, let's look at Cal-Maine's debt. The net debt to EBITDA has increased over the past 5 years and is currently -0.7. Since the company is profitable, this negative value means that Cal-Maine has more cash than debt. This is a very favorable position for a company to be in. Last, let's explore dividends. Dividends are an important factor of investing, but not a topic I have previously focused on in videos on this channel. Dividends per share for this company have grown tremendously from 50 cents in 2019 to $4.30 most recently. This represents a 65% dividend per share CAGR over the past 5 years. Scrolling up, we see that over the past 10 years dividends per share have grown at an astounding 29% CAGR. This is a very unusual situation, so I dug in and found that Cal-Maine has an interesting dividend policy. Cal-Maine has a dividend policy adopted by its board of directors. Pursuant to the policy, Cal-Maine pays a dividend to shareholders of its common stock and Class A common stock on a quarterly basis for each quarter for which the company reports net income attributable to Cal-Maine Foods, Inc. computed in accordance with generally accepted accounting principles in an amount equal to 1/3 of such quarterly income. Dividends are paid to shareholders of record as of the 60th day following the last day of such quarter, except for the fourth fiscal quarter. For the fourth quarter, the company will pay dividends to shareholders of record on the 65th day after the quarter end. Dividends are payable on the 15th day following the record date. Following a quarter for which the company does not report net income attributable to Cal-Maine Foods, the company will not pay a dividend for a subsequent profitable quarter until the company is profitable on a cumulative basis computed from the date of the last quarter for which a dividend was paid. This means that the company's dividends do not follow a typical raise schedule but are directly tied to the quarterly earnings. Therefore, dividends will be extremely volatile. The fundamentals of Cal-Maine are not bad and look to be improving. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Cal-Maine. It is a food company with a gross margin of 35%. The 5-year revenue per share CAGR is 20% and the 5-year free cash flow per share CAGR is 80%. These are magnificent gains. A return on invested capital of 53% is great, but I am wary of believing this can continue. Next, the cash conversion cycle of 43 days is not great but has been improving. Interestingly, this is an area of fundamentals that should be attributable to the strength of management strategy. Concerning debt, a net debt to EBITDA of -0.7 means that Cal-Maine's cash and excess debt and is profitable. So from a fundamental standpoint, Cal-Maine looks decent. Now let's switch our attention over to valuation. Cal-Maine is overvalued relative to the S&P 500 with a ratio of 1.6. The price to earnings growth, or PEG ratio, is not calculated for this company, which means that not enough analysts are covering it to give earning predictions. While management has done a pretty good job of running the company, the biggest thing to note is that the company's fortunes are tied to inflation. As inflation took off in 2021, Cal-Maine was able to pass through their higher cost to consumers. This allowed them to raise margins and increase their bottom line. It was not that the company was selling more eggs or drastically grew its customer base, but rather the rise in revenue was due to a rise in the price of eggs. A chart from the Bureau of Labor Statistics demonstrates this. We can see that the price of eggs grew over 100% year-over-year from April 2022, and has just recently fallen to a more moderate 64% in February 2023. This rise in revenue led to a rise in cash flow, which led to a rise in earnings and ultimately resulted in a dividend yield of nearly 20% last quarter. However, some fundamental improvements seem to be due to strong management. For example, improving cash conversion cycle is likely due to strong inventory management and supplier negotiation. Cal-Maine is an interesting company but is very volatile. The performance is tied more to macroeconomic events than strong management, which makes it very difficult to anticipate predictable cash flow. For these reasons, I will pass on adding it to the watch list. Many thanks for watching. What do you think about Cal-Maine and its tremendous revenue growth? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.